Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Wednesday, July 12th, and then we'll see how things look for July 13th. We had a pretty positive reaction to the CPI. Unfortunately, we set the highs early in the day, and then we spent a lot of the rest of the day coming back down, so the bar doesn't look all that good. But it's shifting our technical picture more positive. You could still suggest that we're getting up a little too far too fast. This could be momentum, showing that we're just moving higher, but at the same time, we might go up too far too fast and then look for some kind of a pullback. On a longer term basis, we still have not broken above that longer term support. On a longer term basis, we have not broken above that longer term resistance. But on a shorter term basis, we have gone above the short term resistance. So things are showing some improvement, but we again need to see more follow through with this. So what are some things that we can talk about? The CPI was taken as positive as inflation is coming down. The S&P 500 and NASDAQ did set new 52-week intraday highs, not closing highs, but intraday highs. Mega caps and the broad market showed strength in Wednesday's session. On a short-term basis, our list is getting longer. We have our short-term moving average study, the CCI 14 and 20, the Stochk RSI, the Williams percent R, the standard deviations chart, and the stochastics. Intermediate term, we have the balance of power. The oscillators are still showing a negative divergence. The Sean trend meter, the BPI, both for the S&P 500 and for the NASDAQ 100. Long term, we're keeping an eye on some 150 and 200-day moving averages that are starting to go up a little too fast. The dollar was down and interest rates were also down. The yield curves that we watch remain inverted. Sentiment ticked up from 79, where it closed at 80. That's extreme positive. Our trend is looking better. The green line is turning back up. We're still below the moving average, but we're trying to turn back up. But both the moving average and the ADX are above 20. Our bias and our momentum are now positive. The economic reports that came out. CPI came in up 0.2% month over month. They had expected it to be up 0.3%. The big thing that they're focusing on now is a thing called the index for shelter, and it accounted for 70% of the increase. It costs more to live places. When you look at the core CPI, when you take out food and energy, it was up 0.2% month over month, lower than the 0.3% they had expected, where year over year it translates into a 3% rise, where last month it came out at a 4% rise in inflation. When you look at the core, it comes in annually at 4.8%. Last time it was at 5.3%. We had the MBA Mortgage Applications Index, which came up 0.9%. Last time it was down 4.4%. Here's the intraday chart showing how we gapped above R1 and R2. Looked like we were moving higher. We never even got up to R3, which was at 4,500. We started to top out and then come down. One positive thing is that R2 did act as support. We bounced up off of that, then saw some weakness coming into the close. Our trend is showing that the ADX is turning back up and trying to go above the moving average. The green line is on top and advancing, but we're getting near this 40 area again, which might mean that we're extreme positive. The daily chart also shows that we broke out above previous highs, but the bar itself doesn't look all that healthy, where we closed near the low of that bar. On the bottom, you can see where volume picked up, but is still below average. We're still seeing negative divergences with our oscillators. That can be how they're calculated, or it can be a legitimate negative divergence suggesting that weakness may be coming into the picture. We're also seeing a negative divergence with the RSI 14 and 9 period. The transports did not participate in the rally on Wednesday, so our ratio actually ticked down a little bit, but overall it continues to advance. We're trying to get above this 61.8% retracement level. Now, please keep in mind that even though I use a computer to draw these lines, I have to eyeball it, so it may not be an exact level. We want to see this price continue to go up above this to show more conviction. We're also a little bit above the previous high with the NASDAQ 100. We closed just barely above that. That's where we set the new 52-week high, but we need to see a continuation of this. Longer term, we have not broken above this resistance level here, And is that going to cause a problem for the S&P 500? We're also still running into some resistance with the NASDAQ 100. When we look at the NASDAQ to Dow ratio, we're still at a very high level. It could still go higher than this, but other times when we got to this level, that did pose a problem for the market. So what's our outlook for Thursday? The technicals are positive, and you can make a case that we're becoming overbought, or on the other hand, that we're showing good momentum. We have the weekly jobless claims coming out. The PPI will be the big one, and then the Treasury budget. We're keeping an eye on the geopolitical events, but the markets are fixated on inflation and interest rates. Here's the updated economic calendar for the week. The Stock Traders Almanac statistics are positive across the board for the Dow, S&P, and NASDAQ. We will be on the 8th trading day of the month, where we start to see some more follow through to the upside. We're getting closer now to the midpoint of the month, where typically, historically, we do see some weakness. We're also keeping an eye on the middle part of July for the NASDAQ too. Historically, it may top out and also start to show some weakness. So our scenarios, we're not really going with the down one right now because our technicals are positive. We are looking a little overextended to the upside. You could make a case for it being overbought, or we might see some more follow-through action to the upside. So that's what we're defaulting to right now. But be aware that we are going up a little too far, too fast. But we're not going with the sideways trend right now because our ADX, even though it's below the moving average, both the moving average and the ADX are above 20. That's suggesting that we are in a trending environment. So our warning signs, the longer-term trend signals based on those weekly charts, that could be signaling that we're at a top. We don't know that yet, but it could be saying that. The oscillators that we follow are negatively diverging. The VIX is still showing that there's not a lot of fear in the market. The cumulative new highs, new lows for the NASDAQ continue to show weakness. We're still above that 2007 level with the 3-month yield. If we start to drop back down, is that giving us a warning sign? Growth, even though it's in an uptrend, is starting to really show some weakness, and that's a bit of a concern. And then earnings season is starting to get ready to ramp up. What are our positive signs? The longer-term seasonality and setups, those remain in the background. The daily chart for the Special K is positive, but the weekly chart is negative. The longer-term equity put-call ratio is positive since it's declining. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture. The transports are improving, but again, they didn't participate in Wednesday's rally. Lower price levels so far have been providing support. The S&P is outperforming utilities, and the NASDAQ is breaking a little bit above that 61.8% retracement level, and the NASDAQ 100 is exceeding that previous high. We need to see more follow-through with that. The Staples to S&P 500 ratio is declining. The small cap index, measured by the Russell 2000, and the mid caps have generated recent golden crosses. Please be aware that the S&P small cap index has not. And small and mid cap growth continue to be positive. So our conclusion, the S&P remains positive, but you could say we're getting a little extended to the upside. That's what happens when we're in a sideways market and we get a fairly significant move. It doesn't take much for our indicators to get extreme. In the short term, we're positive and we're more overbought there because our list is longer. In the intermediate term, we're showing a few indications that we're getting overbought, but we could still go higher in both the short and intermediate term. The long term, though, still remains positive. Thank you. I hope you found this helpful. Please feel free to check out the full-length daily video. Have a very good day, and I will talk to you in the next video.